Hey everyone, today we're going to jump right into the latest numbers from Ottawa's housing market. We'll break down all the data from October and really figure out what it means, whether you're looking to buy, sell, or just keep an eye on things. So let's get into it.
So, let's get right to the big question, the one that's on everyone's mind. What is the real story with the Ottawa market right now? Is it heating up? Is it cooling down? What's really going on out there?
Well, the answer, based on all the latest data, is that the market seems to be finding its happy place. We're talking about a steady, balanced middle ground. It's not a story of crazy highs or scary lows. It's all about stability.
So let's start by looking at just how resilient this market is. I mean, with all the economic chatter out there, you might expect some pretty big swings, but Ottawa's housing sector is showing some really impressive stability. And that's really the key theme we're seeing. The market isn't booming like crazy, but it's definitely not busting either. It's just holding its own, navigating everything that's going on with a pretty steady hand. So let's look at the numbers that prove it.
Okay, so let's get into the hard data. We'll start with the two big things everyone wants to know. How many homes are actually selling and for how much?
The headline number for sales activity is 1,177. That's the total number of homes that changed hands across Ottawa last month. But, a number like that doesn't tell the whole story on its own.
And here's where the context is so important. On the one hand, sales jumped over 8% from September, which is a pretty typical pickup for the fall market. On the other hand, we're down just a tiny fraction, 1.2%, compared to this time last year. This tells us that activity is solid, but it's not overheating. It's right in that balanced zone.
So what about prices? Well, the average sale price for a home in Ottawa in October clocked in at just over $709,000.
And this is just a great illustration of that market resilience. Prices are up almost 3% from last month and a very healthy 5.7% from this time last year. It just shows that demand is strong enough for home values to not just hold steady, but to keep on appreciating.
Okay, so now let's move to the other side of the equation, supply. You can't really understand prices without knowing how many homes are actually for sale. This is what we call the inventory story.
Now, before we get to the data, let's quickly define a key term, months of inventory. It sounds kind of technical, but it's super simple. It just means if no new homes were listed, how long would it take to sell every single home currently on the market? It's a great barometer for market balance. And as you can see here, the months of inventory actually went down from 4 months in September to 3.6 in October. This signals a slight tightening of the market. There's just a bit less supply for the number of buyers out there, which gives sellers a little more footing. And if we drill down a bit, we can see that fewer new homes came onto the market in October compared to September, which is a completely normal seasonal pattern we see every year. The total number of active listings also dipped. Now, while supply is still higher than it was last year, this easing off suggests the trend of rapidly rising inventory might be stabilizing.
Of course, the housing market doesn't exist in a vacuum. So let's look at the big economic news that's influencing buyer and seller decisions right now.
Towards the end of the month, we got a pretty significant announcement from the Bank of Canada that directly impacts borrowing costs and, just as important, buyer confidence. The bank cut its key policy rate by 0.25 percentage point, down to 2.25%. And while this offers a little relief for people with variable rate mortgages, the bank also signaled that this is likely the last cut for a while. So this is probably the new reality for the foreseeable future. And this quote from the Ottawa Real Estate Board president, Paul Xan, really just ties it all together. He highlights that balance and resilience, and he notes that the current environment points to a steady market, not a rapid shift. It's all about caution and stability.
So, with all that in mind, let's zoom out and put October's performance into the context of the entire year so far as we head toward the finish line.
When you look at the first 10 months of the year, the story is one of modest, sustainable growth. Home sales are up 3.3% compared to last year. The total dollar volume of those sales is up over 6.5%, and the average price has seen a healthy 3% increase. This is basically the definition of a stable market.
And if we use the benchmark price index, which tracks the value of a typical home, we can see exactly where the strength is. While single-family homes and apartments are holding pretty steady, just look at townhouses, up a massive 6.6% year over year. This shows you exactly where demand is strongest right now, probably because townhouses offer that sweet spot of space and affordability for families.
So, the crucial point is this: Ottawa's housing market is fundamentally healthy. All the data points to a market that is moving with caution and stability, avoiding the wild swings we're seeing in other places. It's balanced, it's resilient, and it's predictable. And that leaves us with our final question. The market is in this really delicate balance right now. So as we move into the slower winter months, will this stability continue, or is this just a quiet before a much more active spring market next year? Only time will tell. Thanks for watching.